a multi-millionaire by the age of 35 and how you can do the exact same thing. So I've got a simple question for you. Do you want to be rich and have the freedom that comes with being financially stable? Many people do. Why do you think there's so many get-rich-quick schemes out there? Most people, though, unfortunately have a lottery mentality. They're just waiting for the magic fairy to come down and hand them $1 million. Do I look like the magic fairy to you? If the answer is no, and I really hope it is no, then smash that thumbs up button and subscribe to the channel. The truth is, lots of people think that winning a chunk of money will make all your problems just disappear. But they'll be in for an absolute shock. Without the correct investing and mindset strategies, it will be all gone, and in no time you'll be back to square one. You need a solid, consistent investment plan which gradually builds your wealth over time. Long-term investing will give great returns. When I was younger, I always wanted to be a race car driver. I just loved everything about cars, but I didn't have enough money to pursue my dreams. But as I started building up my investments, it allowed me to race in multiple championships and win countless trophies like this. I even got my helmet here, look. You sometimes see it at the back of the shots. How cool is that? My investments even allow me to spend time having fun making these YouTube videos, like the one you're watching. I don't currently make any money from this channel, and you can sit back and relax because I'm not going to try and sell you something at the end either. There are so many different investments out there. It's super easy to get distracted by the next shiny object. It's also confusing when you have someone telling you that this is the best thing, the latest and greatest, and if you don't invest, you could end up losing thousands. You may have heard of Bitcoin, penny stocks and short selling, but I found the key for me is not to get overwhelmed and distracted by the latest trends. Now, you've got to face it, you are never going to be an expert at everything, and by consistently changing your investing strategy, you ultimately end up with less money, and at some point you're going to make a big mistake. I have nothing against experimenting, but I've kept my main investments very consistent over the years, and I make sure to only invest large sums of money into things that I understand completely. I'm not going to pretend that I have all the answers, but I am going to be completely transparent about everything I've done that's helped me acquire a multi-million-dollar net worth. I'm a businessman and not a financial advisor, so I don't consider this financial advice. It's just what I've done and it's worked for me. First of all, you need to create more disposable income. At the end of the day, you need money to invest, and the more money you have, the better, especially during your 20s and 30s. Now, lots of people will say to you, save, save, save. Don't go out with your friends. Don't drink that overpriced coffee. Don't buy that nice car. I don't completely agree. Of course, saving is a big part of this, but you have to enjoy your life. There's really no point making yourself miserable just for the sake of saving an extra few dollars. You should focus most of your time and energy on increasing your income. You can do this by learning new valuable skills, having a side hustle, or building a scalable business. You don't have to settle for money you get from your 9-to-5 job. You need to be focusing your time on finding ways to supplement or replace it. When I was in my early 20s, I realised my income as a carpenter, earning less than $3 an hour, was never going to give me enough money to invest. It hardly even paid my bills. I needed to find a way to dramatically increase this, and this is when I started my journey into the business world. Investing and business really work hand in hand. The saying is very true. The more you learn, the more you earn. And most importantly, the more you can invest. Be really aware of your lifestyle and make sure to keep it in check. Just because you're earning more doesn't mean you should be spending more. Think of someone like, say, I don't know, Ed Sheeran. He has a huge amount of money, yet he keeps his lifestyle in check. He still enjoys the little pleasures of life. If you were happy making, let's say, $40,000 a year, and you managed to increase your income up to $100,000 a year, that means you've got an extra $60K. This should be going straight into a high interest savings account and then into your investments. You know, you don't need to be spending it. Well, there is one slight exception, and that's stage number 2. Pay off all your high interest debts. If you have student loans, credit card bills, or even a payday loan, then these are pulling you down. They're destroying your credit score, which ruins your ability to take advantage of good loans. By paying off these high interest debts first, you'll actually save more money than you could ever hope to make elsewhere. The next stage is to create a freedom fund. This is my name for an emergency fund that puts the power back in your hands. This freedom fund consists of 3 to 5 months of living expenses. It protects you if you decide to quit your job, as well as a lot of other situations such as recessions, depressions, or even worldwide epidemics. Okay, so you've increased your income by learning a valuable skill, or maybe invested in your own business. You've kept your lifestyle in check, you've paid off all your loans, and you've created the freedom fund. Now, and only now, is the time to start looking at other options. Let's start off with the lowest risk option: index funds. An index fund is a collection of investments that you can put your money into and own a percentage of the entire thing. This gives you a fantastic diversification and protects you from poor stock choices. For example, let's say you got $1,000 and you invest it in, I don't know, let's say Apple stock. Because they're a big company, right? They're going to be safe. As soon as your money goes in, the company takes a turn for the worse, causing the stock price to crash. The result could be that you lose the majority of your investment. This is where index funds come in. Instead of owning just Apple stock, you could take that $1,000 and invest it in something like the S&P 500, which gives you small shares in Apple, as well as Microsoft, Amazon, Facebook, Visa, Disney, and many more. You're a shareholder of all these major companies. Now, if something happened to Apple, it would be balanced out by the other investments in your index funds. Now, lots of people will try and convince you that a mutual fund is superior. A mutual fund is very, very similar to an index fund, except it's controlled by a very smart person whose job it is to pick the stocks in the fund. The purpose of a mutual fund is to try and beat the market and get better results for the investor. However, in the vast majority of cases, you'd be much better off putting your money into a simple index fund with less risk and often a greater return. This is because index funds charge extremely low fees. The S&P 500 charges 0.07% annually, and mutual funds charge high fees, between 1 to 2% of your account balance annually. If you invested $10,000 into a mutual fund, then $200 would go straight into that fund manager's wallet every single year, even if he caused you to lose money through poor stock choices. On the flip side, if you had the same amount invested in the S&P 500 index fund, then only $7, yes, just $7 would be leaving your account annually. This is because index funds are passively managed and therefore don't have to pay a manager who may or may not be doing a good job. For long-term investments, I love using Vanguard index funds, as I like these. They're so easy to use. I'm not affiliated with Vanguard in any way. I just like the way it works. I also like to mix it up a little bit with some international funds and bonds to diversify my portfolio even more. The older you are, the more bonds I recommend you invest in. And I don't mean James Bond either, although he is pretty cool. The investment method I put the majority of my money into is real estate. I am much more of a real estate guy than a stock guy. I like real investments I can feel and touch, but I appreciate that it can be hard to buy properties with little money, but it's certainly something you should be saving for. My first property was a 1-bedroom apartment and I loved it. It was mine. It cost me around $50,000. And when I moved out, I decided to rent it $500 a month. I had this property for around about 10 years, and when I sold it for $150K. And after this, I was obsessed with the money that we could make from real estate. Now, this is a good time to decide which type of investor you are. The first type is a capital gains investor. This is someone who likes to buy low and sell high and pocket the difference. These are investors that are interested in buying houses of auctions, or you may have seen the signs outside advertising that. Now, I know I'm a bit of a boomer, but sometimes that can be a good thing. I've been around for a while and I've learned an awful lot along the way. Now, your 20s are a fun part of your life, but they're extremely important at the same time. So here are 7 money-making habits I wish I'd known sooner, because if I did, I'd have made my first million a lot quicker, that's for sure. By watching this video all the way until the end, you'll be able to learn from my mistakes and hopefully do even better. Also, The last habit's a little bit controversial, so it might be worth sticking around for. Habit number 1 is embracing debt. I know this might sound confusing at first, as lots of people think that debt is bad, and you should avoid it like those online courses that cost $997. No, but seriously, it's one of the main reasons I was able to build my wealth from absolutely nothing to multi-millionaire. In my early 20s, I was building my businesses from the ground up, and I didn't have a lot of cash available to me, so I had to get very creative with my finances. I knew that if I wanted to grow my wealth, then I needed to control more assets. And the only way to do that was to use the power of other people's money. Now notice how I said I wanted more assets, and that's a very important point. Lots of people do the opposite and get into debt buying liabilities. Sadly, they're just digging themselves into a hole that they'll find it really hard to escape from. An easy way to find out if something is an asset or a liability is to figure out if the purchase is putting money into your pocket each month or instead just draining your wallet. My favourite thing about borrowing money is that I can buy other companies in cash, therefore getting a better price. I actually still do this today, as borrowing money is currently very cheap. How can borrowing money be cheap? This guy's a lunatic. Well, just think, if I can borrow cash at a 2% interest rate and put my money to work at an 8 to 10% return, then I'm ahead 6 to 8%. I just always make sure to run the numbers on my decisions and not leave myself too exposed to debt, so that if something went wrong, then I would be able to handle the repercussions. It's definitely true that you should be cautious of debt, but never fear using it to your advantage. If you're enjoying this video so far, make sure to smash that like button for the LTube algorithm, as it helps push this video out to a lot more people, and it's really appreciated. Habit number 2, being obsessed with success. I believe to become a millionaire, you must have laser focus, much like an Olympic athlete. I couldn't agree more with the quote, when you want to succeed as bad as you want to breathe, then you're going to be successful. Many of you aren't probably aware of this, but before I was known as a businessman, I was famous for flying radio control helicopters, and I competed to a very high standard all over the world. At one point, I won bronze medal at a world championships held in Indiana, USA. I would be obsessed with every little detail of my model. I did everything I could to win. I was absolutely relentless. To get to the top of anything, you need to put in the extra bit of work and then a little bit more. When I started my first business, I applied the same obsession. I set myself both short and long-term goals to keep focused at all times. Having a laser-like determination to succeed is key for your growth, and I was absolutely obsessed with hitting my sales targets. First, it was just to complete a year of business. Then it was to do last year's turnover in just 1 month. Then in just 1 week. But I always had the ultimate goal of becoming financially free. Even Elon Musk claims he regularly works 80 to 100 hours a week, and this is fueled by his obsession to hit his targets and meet his goals. How else will Tesla smash earnings reports and SpaceX land humans on Mars? The sad news is 60% of businesses fail within the first 3 years, and that's why focus obsession is so important. So stay focused and keep grinding. Amazon wasn't the biggest retailer overnight, and Kevin O'Leary said he would have laughed Elon Musk out of the building if he'd appeared on Shark Tank with a Tesla pitch. Habit number 3 is building income streams. As I've grown older, I must say my passive income streams have become very useful. I no longer have the energy of a 20-year-old, however, I don't have to, as I put in the work when I was younger, and now I can reap the benefits.
And you can make me do all the work as well.
Well, someone's got to. I created my first passive income stream accidentally when I refused to sell my apartment in my 20s. The apartment would have sold for around 40% less than I'd paid, and I wasn't interested in taking a hit like that, so I rented it out. This ended up being a great decision, as this paid the mortgage, and after 4 years, the apartment sold for 60% more than I'd originally paid. So not only did I receive rent every single month totaling more than the mortgage payment, I then sold the property for a huge profit and put that money to work in the stock market. This really showed me the power of passive income, and I was hooked. Now, I admit the term passive income has become a bit of a buzzword online, and the truth is no income is truly passive, as there is always something that has to be done. However, some income sources are certainly more passive than others. The idea is to create something once and have it pay you as much as possible with minimal effort. Passive income is very addictive, especially when you wake up and you realise you just got paid for sleeping. A good way to start is to grab your free stock from the public app, worth all the way up to $1,000 if you're in the USA. And if you want to grab $10 worth of free Bitcoin from Coinbase, then that's open to everyone. So I'll leave those links in the doobly-doo below. Habit 4. Knowing when to quit. Now, I know this one might sound a bit strange. Quitting is usually seen as a bad thing, but in my experience it helped me go from a carpenter's apprentice earning less than $2 per hour to a millionaire by my late 20s. When I was working that minimum wage job and I first had an issue with my manager bullying me, I could have kept going and worked my way up the company gradually, but I decided to quit. That led me to starting my own business, and within a few months I was drowning in all the paperwork, so I decided to quit that job and I hired someone to help. And before I knew it, I'd replaced all the jobs I could with other people. This allowed me to focus on being the captain and steering the business in the right direction. The big lesson here is not to be too proud to quit when you don't like something or you feel the effort is not worth the reward. I see so many people struggling at university and working long days and nights for a degree they don't actually want. They have just been pushed down that path by teachers and parents. Of course, this isn't everyone, but in my opinion, quitting has its time and place, and there is no shame in admitting something isn't for you. This isn't to say that you should quit just because something's hard, but there has to be a reason to put in all the hard work. Don't let others shame you if you make the hard decision to move on to bigger and better things. After all, the opportunity costs of staying where you are could be much greater than you realise. Just imagine if I'd stayed working as a carpenter making wooden trash cans all my life. Nah, that'd never have happened. Habit number 5 is treating your body like a sports car. Brum brum. I know I might be sounding a bit like a fitness guru, but as cheesy as it is, without good health, you won't be able to unlock your full earning potential. I had to relearn this lesson recently when the pandemic hit. Lots of my staff were in lockdown, which meant I decided to work 3 months flat out. I was even in the warehouse packing and shipping orders with minimal staff, as I didn't want to let my customers down. I actually worked 15 hours a day, 7 days a week for 3 months straight. I got very much money I made. There's also a bit of a twist because I've invited a guy called Tom round who's never invested in his life. He doesn't have a job right now and he's been finding things really a little bit tough. While he thinks he's coming around for a simple how to invest for beginners tutorial, I've got a surprise planned for him. I'm actually going to give him some money to jumpstart his investing journey, as I would really have appreciated that at his age. If you like this idea and you want me to do it with more people, then make sure to smash that like button to let me know. I'm really excited for this one. I can't wait to see his face. He'll be arriving any minute now. So we're here with Tom. How are you?
I'm not too bad, yeah. Very difficult time at the minute. You know, I've been looking for a new career path and a new job.
I know you've spoken a little bit about being interested in investing.
Yeah, I am very interested, but I don't know that much about it actually. I mean, I've been watching a lot of your videos, my friends have been watching a lot of your videos and they've actually started investing, so I'd like to give it a try.
Well, that's good. Well, that's good to know because that's what we're trying to push out, to get young people investing early. So Tom, we've made a video recently where I invested $100 into lots of different investments, and during this video we're going to see how those investments went. Should we dive straight in?
Definitely.
Let's do it. So this is the first investment. This is a high interest savings account and we invested $100 and at the moment that's had a return of 0.04%, and the reason it's lower than when we started is because they lowered the interest rate. So our profit is 4 cents.
4 cents, that doesn't seem like a lot. Why would I invest in that?
So this investment isn't about the interest you're going to gain, because nowadays it's really hard to find a really high interest savings account. The real reason one of these is so valuable is because you can use it as a backup fund, and you should have in there around about 4 to 5 months of your living expenses.
Why would I need that?
Well, the reason is because if you have an emergency in your life, I mean, you might have a flat tire on the car or the engine in the car might blow up, whatever the reason, you've got the cash to hand to be able to sort that problem out immediately without having to go and borrow the money, which is going to cost you a high amount of interest.
So basically, it's not about the money you make, it's about the money you save.
You've got it. Something a lot of people don't know, but 78% of Americans live paycheck to paycheck. So by doing this, you're already ahead of a lot of people.
Well, that's where I want to be.
The second investment we made was into gold.
Oh, I love a bit of gold.
Well, we all like a bit of gold, and we invested $100 into this. The return on this was minus 0.98%, which means we lost 98 cents.
So why would I invest in something that loses money?
Because it protects you against inflation.
What's inflation?
Well, think of it this way. This dollar has actually lost 95% of its value since 1913. And that's why your grandma and your grandparents always say they could buy so much more with their money when they were younger.
Well, that makes sense, but how does that link to gold?
Well, that's actually an easy one, because as your dollar loses value, gold generally goes up in value. So by investing your dollar in gold, you're keeping it a lot safer.
Well, how come you lost money?
Well, because the gold market always fluctuates. So gold basically moves in the opposite way to inflation. As inflation goes up, the price of gold goes up.
I never really thought about it like that. Do you just buy blocks of gold?
Well, you can do that, but I prefer to invest into ETFs and ETCs, which means you can buy and sell gold much, much easier.
So what's an ETF?
An ETF is an exchange traded fund, which means they hold the gold for you. You don't have to physically hold it and put it in a safe or anything like that. They store it all over the world, and there are billions stored up, and you can actually buy and trade it on the stock market.
Well, that's interesting. I didn't know you could do that.
So just to finish this section off, gold is a very, very rare thing. You can't make any more of it. Well, you can, but it's too expensive to make it, so you wouldn't. So it won't lose value the same way that money will. Unless, of course, Elon Musk finds a great big meteor that's full of gold, of course, and he might do that. Investment number 3 was an S&P 500 index fund, and we invested again $100. Our return was 1.84%, which gave us a profit of $1.84.
Well, that's a good profit, but what's an index fund?
Owning a stock is like owning one cow, whereas owning an index fund is like having the whole herd. So imagine if you own just that one cow and it dies, you're out of milk. But if you own a small piece of all the herd, then if one dies, it really doesn't affect you. For example, what we chose is the S&P 500, which is the 500 top companies in the USA, such as Amazon, Apple, and now even Tesla.
So I can invest in all these companies in one go?
Yeah, you certainly can, and the fees are really low because it's passively managed. They don't have experts managing all the different stocks. And pretty low risk because it's diversified over all these different companies.
So I'm not going to lie, Mark, but you're only making a profit of $1. Why should I care?
Well, the thing here is that $1.84 is only over a month and a half. And if you actually invested $100 at 8% growth per year over 45 years, you would have over $500,000 in your account.
That sounds amazing.
And do you know what? That $100 a month can just be by having a few less coffees from Starbucks or doing a side hustle. It's easily found and invested into an index fund every month. Investment number 4 is in a REIT, and that stands for Real Estate Investment Trust. And we've invested again $100. Our value has actually dropped by 0.4%, which is a bit of a pain, but we did get a dividend, which is really cool, of 57 cents, which means we are actually in profit by 11 cents.
So what's a REIT?
So imagine you've gone round and you've borrowed lots of money from all your friends, and you've got enough now to go and buy a property, and you rent it out. And of course, because you're a nice guy, you split all that rent with your friends.
So that dividend, is that a share of the rent?
Yeah, that's spot on, and it's from things like offices, hotels, things like that are owned by commercial companies, and because they have to sign such long leases, it's a really secure income.
So this is how I can get into real estate without buying a property?
Yes, think of it a bit like, I own the front door, you might own a window, your other mates might own half a dozen bricks. So you all own a little bit of it and then get paid the rent in return.
I've always wanted to go into property, so this could be my way in.
Investment number 5 is sort of my bread and butter. It's business, buying and selling. And I actually did some research and found a model engine that was underpriced, which I then sold on eBay. And also the guy gave me a model aeroplane as well, which I sold. So we made a profit of $67.86. 97.
Why is the risk level 4 out of 10?
Well, this relies on your knowledge of the things that you're buying and selling, because if you can find the right things, you can make money from them.
I'm really into Star Wars.
Well, Star Wars toys are worth quite a lot of money, and if they're in their packets, you could earn a fortune from them.
All right, you piqued my interest. Where would I look for these things?
Well, Facebook Marketplace is great, and also eBay. And I often look for mistyped titles, and that way you can get yourself a bargain. And sometimes people don't photograph the things very well, so they're going to go for a lower price.
I better get myself a bargain then.
And the great thing with this is you can repeat the process over and over again. One guy went from a paperclip to an entire house. Investment number 6 is Samsung individual stock. And we chose this stock by having a dartboard on the wall. And we had 20 randomly selected companies around it, and we landed on Samsung.
So this was a completely random investment?
Yeah, and as you can see from $100, we've actually made a return of 19.4%, which is actually $19.43.
Wow, so that's with a risk level of 6.5?
Yep, so the higher the risk, the higher the reward.
Would you say luck was involved in your dart throw?
It was lucky I hit the board, not only blindfolded, I didn't have my glasses on either, so it's a absolute wonder. Of course, luck and timing is always a critical part of stock investing. Of course, you can do it without throwing a dart at the board because you can do fundamental analysis.
What's fundamental analysis?
So that's when you look at the financial statements and balance sheets and also the leader of the company. And this can all be found on Yahoo Finance if you're interested.
So what's the best way to get started?
Well, if you deposit $100 on Webull, they'll give you 4 free stocks at the moment. I'll leave the link below. And for you, Tom, I'm going to leave a link for Trading 212. If you want to pick up a free stock, that's fine if you're in the UK or Europe.
Free stock for nothing? Count me in.
Investment 7 is crypto, and we decided to invest in Bitcoin. We invested $100 as before, and we got a return of plus 98%. So in a month, we've made nearly 100% of our money back.
That's amazing. So are these actual coins?
No, they're not actual coins, but they're digital coins. The great thing with Bitcoin is it's decentralized, so it's not actually controlled by any government. And this puts some people at ease because the banks can't control their money.
So can I spend this Bitcoin?
Yes, and more businesses are actually accepting Bitcoin now, and the more that do, the more the value goes up. And remember, this dollar, it's just losing its value because they're just printing more and more. And that won't happen with Bitcoin because there's a limited supply.
But I heard about Bitcoin. They're making them all the time.
Well, actually, they're just mining them, and they're finding all the little bits that are out there. And once they're all found and they're all mined, that's it. There's no more. And that'll probably happen in the 22nd century.
So that's quite a lot.
But still no money. And to reach level 3, you need both skills and money. As a millionaire who started off with absolutely nothing, I've been through all of these levels. And if you do too, then you'll certainly be able to make more than $1,000 per day. And don't worry, I'm not going to be suggesting you spend hours watching ads, testing websites, or filling out those useless online surveys. I mean, they only pay a few dollars anyway, so what's the point? Instead, I'm interested in the big bucks. So these are side hustles you can make good money from. Of course, the faster you progress through the levels, the more money you can make. Level 1, no skills, no money. In this level, it's all about using your time as strategically as possible to create the most amount of money. The first side hustle is being a content critic. This one isn't as well known, but it's definitely in high demand. I'm even willing to pay someone to do this for me. So listen up and let me know if this sounds like something you'd be interested in. The job of a content critic is to give unbiased, honest feedback. Honesty is such a rare thing to find. Most negative comments come from haters, and fans rarely like to offer criticism as many people take it the wrong way. The majority of content creators have developed a tough skin and are actively looking for ways in which to improve their content. That's why, if you're a genuine fan of a particular YouTuber, then you could actually be far more valuable than you realise. So if this sounds like something you could be interested in, then leave me a comment below suggesting what content you'd like to see on my channel, and I'll reach out to the people with the best ideas and be their first client. I'm happy to pay a fair amount for a great feedback report from a viewer, and I'm sure many other creators would be open to doing the same. With multiple clients, you'll be able to build up to more than $1,000 in no time. The second side hustle is flipping Instagram theme pages. This is something you can do with just an iPhone and a bit of time. These are pages that are focused on specific subjects. When I first heard that you can make money from flipping these, I was actually quite shocked. Back in my day, I had to actually buy and sell physical products like
cars for example, but now doing this online actually makes complete sense. Just think about it. When was the last time you scrolled on Instagram and didn't see a sponsored post? They're everywhere, aren't they? This just shows brands are putting loads of money into Instagram adverts, which makes the pages more valuable. If I were you, I would start and grow pages in particular niches by posting regular reels. Personally, I'd pick a car theme page, as I used to race cars, so I know the niche has a big demand from advertisers. I've seen some of these pages sell for thousands.
A bonus one in this level is using the link in the description to get 16 free stocks worth between $2,000 and $2,000 in return for signing up to Moomoo. They're a great investing platform and it's basically free money. Level 2, some skills, no money. These online side hustles require more upfront work to begin with, but as you develop your skills, you'll be able to charge a lot more than the average person, as you're providing more value, and this of course equals higher pay. The third side hustle is designing thumbnails. I actually ran a competition to find a thumbnail editor for this YouTube channel. I did this on my Instagram and we had hundreds of submissions. You might be thinking, if hundreds of people applied, isn't there too much competition? In all honesty, only 3 designers actually stood out to me in that competition, as they took the time to understand my style, and rather than just creating a pretty graphic, they really considered how they could get people interested in clicking. Creating effective thumbnails is more of a psychological task than a graphic design one. The best thumbnails are often simple to create, but the idea behind them is very clever. Just think, if you can increase a YouTuber's click-through rate by even 1 or 2%, then hiring you means instant profit, and you're justifying your own wage. Out of the 3 candidates that stood out, I hired 2 of them myself, and I recommended the third to one of my friends. If you can master this skill and sell 10 thumbnails in a day for $100 each, then that's $1,000 right there. You could charge less and do more, or even charge more and do less. The choice is yours depending on your skill level. The fourth side hustle is tutoring. Now, before COVID, I probably wouldn't have added this one to the list, as most people wanted in-person tutors, and honestly, this business model isn't great, as it's very time intensive, and the amount you can charge is also pretty capped depending on the competition in your local area. However, I really think the world has changed. If you're talented at a particular subject, it may be a great option to teach it online. The key here is to sell the transformation rather than the tutoring itself. I mean, most people don't really go to a personal trainer to improve their technique, they go to become a fitter person. That's why they're always using before and after photos to advertise their services. The same goes for tutoring. You need to sell a specific outcome to a standardized test, such as GCSEs and A-levels in the UK. Facebook is the perfect place to advertise, as it's full of mums that want their kids to do better than everyone else's. Trust me, if you find the right Facebook groups, the demand is sky high. The great thing about doing it online is that you can cut out all the travel time, which means you can work with more people and earn more money. You also don't have to just work for people in your local area, as you can teach anyone anywhere in the world. If you're able to sell 10 spots in a group class for $25 each, then that's $250 an hour. Once you achieve this, you can start filling more hours. You may think that people won't want group classes, but if you give them the outcome you promised, it doesn't matter how you deliver it, especially if you put all the students in a Facebook group and offer them support outside of lessons. Of course, if you're selling the outcome of getting into medical school or completing your exams as a doctor, then you can charge way more, as the potential outcome you're selling is worth a lot more money. The fifth side hustle is creating logos. Have you ever looked at a famous logo and thought, that's so simple, I could do that? I know I certainly have, and I'm ancient. So I'm sure you younger guys watching this will be able to master this one easily. We recently held a competition on my Instagram account where we paid the winner $1,000 for creating a logo for our brand, Strike It Big, which is run by my son and I. We weren't looking for crazy design skills, it was all about the idea. Even if the logo was hand drawn, we were prepared to pay the money if it was a good idea. With this side hustle, no one cares about cutting grass, so he could provide for me and my mum
mum and my 3 sisters. He'd stash away any extra money he made in a shoebox, as well as a bank account that paid little to no interest, hoping that one day he could quit his job working in the factory. When my uncle invested some of his money in the stock market, my dad said it was an extremely risky move. Unfortunately, what my dad didn't realise is that he was also playing a risky game. Can you see where this story's going? Every year my father's money was losing value due to inflation. This is just what happens over time. As more money is printed, the money in circulation becomes less valuable. This meant he was never able to quit his job in the factory. The thought of my money being eaten away by inflation scared me so much that I've made sure to invest throughout my life. As a result, not only have I beaten inflation, but my investments actually now grow by around $17,000 a week on their own, which over my lifetime has made me millions. I'm no financial advisor, but I am someone that's been there and done it. That's why I'm making this video. It's exactly what I wish I had when I was younger. How can I make money investing in stocks? To make money, we first need to beat the inflation issue. In the last 60 years, this averages out to a rate of 3.8% per year. So if your money isn't growing by more than this on its own, then you're getting poorer by the second. In a perfect world, you would have a savings account that provides an average return of 8 to 10% every year, so that you can both beat inflation and earn some profit. Unfortunately, such savings accounts don't exist. However, you can achieve returns like this by investing in the stock market. A stock is a small part of a company, and when you buy it, you become a shareholder. And when you're a shareholder, there are 2 ways you can make money. Firstly, if the price of the stock goes up during the time you own it, you can sell it for more than you paid. Secondly, you can receive dividends. Dividends are regular payments to shareholders. Not all stocks pay dividends, but if they do, this means that you can receive money without ever selling your stock. The magic really starts to happen when you own a bunch of stocks that grow at an average of 10% per year, because the interest applied becomes larger and larger. This is called compound interest, and I have to admit a guilty pleasure of mine is messing around with online compound interest calculators. Let's do one now. If you were able to invest $250 per month at an 8% annual return, in 42 years, you'd be a millionaire. And if you continue to do this for another 10 years, you would actually have over 2 million in your account. Of course, if you wanted to invest even more, then that would just speed up the process. This is all based on historical average data and it isn't guaranteed, but it's certainly been my experience. So as you can see, the real secret ingredient to this millionaire formula is time, which brings me on to, when should I start investing? The short answer to this is as soon as possible. The younger you start, the better, as you're giving your investments more time to grow and compound. This also means you can take more risk, as your investments have time to recover if a stock market crash happens. And it will happen. It always happens. But life isn't as easy as this, as there are often things in the way preventing you from investing. So here's how I would structure things. First, you need to make sure you've paid off all high interest debt like credit cards. Just think about it. There's no point trying to make 10% in the stock market if you're paying 15% to a credit card company. Secondly, build up an emergency fund. This should be enough to cover 3 to 6 months of your living expenses. This way, you're not forced to sell your stocks in the event of an emergency, which can really ruin your progress. Once you've done both of these things, you're ready to start investing. If you're younger than 18, then it would be a great idea to ask a parent to open up a custodial account, which allows them to invest for you. This will give you such an advantage in the future. Your next question is probably something along the lines of, how much should I invest? When you ask an investor, they'll probably say as much as possible. However, I have a different opinion. I made most of my money through starting different businesses and only used the stock market to grow my wealth over time. I've also had a pretty fun life, from flying full-size aeroplanes and racing cars to competing for my country and traveling the world. If I'd invested all of that money into the stock market, then I'd have missed out on so much. So my answer would be to invest whatever you feel comfortable with. But if you want a more solid answer, then the 70-20-10 rule is a pretty good guide. It states that you should split your money by these percentages: 70% on living expenses, 20% on investments, and 10% on the fun stuff. Research shows that people who invest at this level are much better equipped to ride the ups and downs of life and also get ahead of everyone else. That's all well and good, but how do I buy a stock? There are various different apps out there that allow you to invest in stocks. I'll leave some links below. The key is to open the correct type of account. You'll often hear people throwing around the terms Roth IRA in the USA and Stocks and Shares ISA in the UK, TFSA in Canada, and Supers in Australia. If you don't have one of these accounts, then you're missing out, as they allow you to avoid paying taxes on your investments, but they do have limits because they're so powerful. A great thing about these investing apps is they actually give you the ability to buy fractional shares. So rather than buying a share of Apple for $190, you can invest as little as $1. I wish I had this option when I was younger, as it would have allowed me to get some early investing experience without having to take any big risks. One of my favourite investing platforms is Trading 212, as they do both of these things. Since I was planning to talk about their app anyway, I reached out to see if they'd be interested in sponsoring this portion of the video. They agreed and are also offering a free stock worth up to £100 to anyone that uses the code Tilbury when they create an account. One of the really cool things about Trading 212 is they let you practice investing with fake money, so you can get familiar with real data from the markets without risking any money. So if you're a little uncomfortable with investing or just want to try some strategies before putting your own money on the line, this is a great way to get started. Another great feature is called pies, where you can see how other investors have allocated their money into different stocks. If you wanted to invest $100 into that pie, then it would just be split amongst the various allocations that pie creator has chosen. If you live in the UK or Europe, it's worth trying out Trading 212 because signing up is completely free and there are no commissions. Of course, don't forget to use the code Tilbury and you'll receive a free share worth up to £100. Or alternatively, click the link in the description to sign up and see exactly how to access the free share. Now the obvious next question is, how do I pick the best stocks? There are two main ways to attempt to predict the stock market. These are called technical and fundamental analysis. A good way to think about this is like a scale. Usually, short-term day traders are purely focused on the technical aspects. This includes looking at charts and patterns. They believe they can predict how the stock will change in price by judging the highs and the lows on the graphs. As a long-term investor, my strategy is about keeping it simple. Lots of people talk about using margin and options, but that's really not something I worry about. I'm a lot more focused on the fundamentals of a company. This includes the financials, the leadership, and the brand recognition, as I believe this is where the true information lies to indicate the long-term success of a stock. When I invest in a stock, I don't have an intention of selling it for at least 2 to 5 years. However, like I mentioned, it's a scale, so I do look at the occasional chart in order to find the best time to buy. This approach has helped me find some really good investments over the years, rather than just dipping in and out trying to make a profit every day. But with the majority of my investments, I don't actually do any of this. That's because I allocate most of my money to index funds. This is definitely the best strategy for most people. So, what's an index fund? It's a way for the average person to make more money than the professionals with very little effort. I'm a big football fan, and if you've ever followed any sports, you'll be familiar with a league table like this. The better your team performs, the higher up they'll be on the list. On the other hand, if they do really badly, they might be removed from the league entirely. This is almost exactly the same as an index. All you have to do is switch out the teams for companies. Let's take the S&P 500 for example. This is a list of around 500 of the largest public companies in the USA, the big dogs being Amazon, Google, Apple and Tesla. Just like the league table, if a company does poorly, then they run the risk of being removed from the list. With this league table or index of companies, you could go and buy stocks in some of them individually. However, if something bad happens to those companies that you've picked, then you can wave goodbye to your money. The idea of an index fund is to be a little bit sneaky, as it allows you to invest in every single company on the list, with just one click. Even if a few companies do terribly, then it's balanced out by all the companies doing extremely well. The average annual return of the S&P 500 over the last 10 years has been 13.6%, although this is slightly higher than the average over time. No one has ever lost any money if they've bought and held an S&P 500 index fund for more than 20 years. The truth is that the average actively managed fund returned 2% less per year than the market in general. This means that the professionals on average are doing worse than index funds, and even if they end up losing you money, they still charge you high fees, no matter what. The reason that index funds can charge really low fees is because they're passively managed, which means they look after themselves and don't need an expert to keep adjusting them, meaning the fees can be as low as 0.02% per year. When I tell people about index funds, it often blows their minds. However, when they go onto an investing app, they get confused at the different options and ask, what's the best index fund to invest in? Well, as I said, I'm not a financial advisor, but I have had a lot of success with 3 different types of index funds. Number 1 tracks the S&P 500 index. This is the one we briefly mentioned before. The historical return of 8 to 10% has allowed me to generate a fortune over the years. This is due to the power of compound interest. The S&P 500 tracks 11 different industries/sectors, and no sector is more than 30% of the index. However, it is worth pointing out that it's a bit tech heavy these days, with 5 tech stocks dominating 23% of the entire fund. It's up to you if you see this as a positive or a negative. I personally don't mind, as I believe in the future of technology. There are so many different index funds that track the S&P 500, so here are some of my favourites. The best I found in the USA are the VFIAX Index Fund or the VU ETF. The best in the UK would probably be the VUSA ETF. The only real difference between an index fund and an ETF is that the ETF can be purchased or sold at any time throughout the day, just like a stock. Index funds can only be purchased in full. So for example, if the price is $500, you must pay $500. An ETF, on the other hand, can be purchased in fractional shares, which means you don't have to buy a full share, and instead you can invest whatever amount you like. This is great if you're just starting out or want to dollar cost average in. Personally, I've set up a direct debit every month so the money leaves my bank account without me even noticing. Really and truly, there isn't a huge difference between an index fund and an ETF. Just consider which one is best for you. Take the plunge. Number 2 is a total stock market index. The total stock market index has returned investors an average of 13% each year over the last 10 years, which isn't bad at all. It's the definition of diversification. You can't really get any more skin in the game for a lower cost. If you want to invest for a long period of time,
Watch expert ever. But it wasn't always this way. Today I want to understand what makes Nico tick. This means diving into his background, his businesses, and his deepest insecurities. This is a story you don't want to miss a second of, as you've never seen him open up like this before.
This is something I haven't digged in many years, if you know what I mean. So
let's wind his rags to riches story back to the beginning.
Now, as I understand it, you were brought up in Amsterdam and you moved to Ireland. So what initiated that big move?
a change in life. I needed a change in life desperately. Being unhappy, being lost, just a change of scenery, change of friends. I wasn't rolling in the right circles, and I wanted to achieve something in my life. I just wanted to be happy, and I wasn't.
So what was the dream?
I had the opportunity to prove myself in Northern Ireland playing football. I moved to Northern Ireland, packed everything I had, but unfortunately, I broke my ankle in literally my first month.
So your dreams came shattering down there. So how did that feel mentally? I mean, that puts a big void in your life.
I was devastated. Achieving becoming a footballer, that was my main goal. It was all I knew. I wasn't doing well at school. I don't have any diplomas. That's all I wanted to do, and that's all I did when I was younger. I didn't achieve it. I let my parents down, and I've lived with that for many years after. My parents gave up everything for me to clear the road so I can play football, and I can maybe even make it a job. I remember my first surgery in my left knee. It was just a simple surgery. You call it a meniscus surgery. You drill 3 holes, they do a camera and fix whatever they fix. and over with. We all thought that was it. But all of a sudden, listen, the first surgery, we found the problem and we couldn't fix it. And it's like, oh, okay, talk to me. How do we fix it? So I'm like, we'll have to reconstruct your entire knee and this and that. And it's like, but like, what does that mean? What does that mean? It meant like that I had like 5 or 10% chance to play football again. That's the first time I've ever seen my father cry. That was rough. That was rough at that time. I have never experienced pain in my life like it, right? If you're ever in a moment of absolute desperation, ask yourself this question. God, if you exist, show yourself, because now I need you the most. Fuck, don't put that shit on camera, please, but fuck you.
But the thing is, at 17, you're not equipped to be able to deal with these emotions, are you?
No,
that's the trouble.
This is something I haven't digged in many years, if you know what I mean. So, wow. I don't know if I told myself this. I don't know if I fell asleep. I don't know. Whatever it is, because I always try to look at things very rational, black and white. But damn right, I had a period where I had no pain. How to break me in that way? Like, fuck me.
Can you see the ball or what? Yeah! He told it.
Pride and opinion in the watch business as it is today is the first time I actually succeeded in life. After everything I've done, I didn't do well at school. In anything I've ever done, every job I've ever had, I got fired.
Do you have a problem with authority?
Yes, significantly. Yeah. And I'm always late as well.
Yeah, I mean, I have a similar problem with being bossed around at work, and I think we resigned in a similar way. I mean, I literally had enough, and I went, that's it, I'm going. There's my notice, I'm off. And I think you had a similar situation.
I remember me driving into the office, and you need to go into the basement, and that's the parking, you park up. And I remember opening the door, and I stepped out of the car, and I knew when I looked around that this was going to be the last time I was going to be here. It's really weird. And I resigned there and then. Within 15 minutes, I jumped back in the car.
Look at this door here, guys. Look at it. Oh, it's a safe door.
Are these flights booked for tomorrow?
I can't even move it. Wow.
So what you see here is basically everything from about £1,000 upwards to $500,000 to even further than that. From extremely rare vintage to really, really cool, quirky watches. Everything you see is watches that I really, really love, and that's what I want to display. Watches that I love. That's the watches I want to sell. That's why I don't sell certain brands. I refuse to sell certain brands because I just don't like them. Yeah. It's passion above profits. That's how I approach it.
So you didn't have a job, you didn't have any plans. What was your first move?
Funnily enough, in any of my companies that I have, I've never written a business plan. I just knew I just wanted to go into the watch world. I'm obsessed with watches, and I fixed and repaired watches as a side hustle, making a few quid. But how do you make money with watches? And that's literally where I looked at. I can either go ahead with repairing and fixing watches, but I'm not making really good money, not good enough to maintain myself. Let's try sell it then.
So what was the first watch you bought and sold?
Tudor Pelagos, Breitling Navy Timer, and a Rolex Datejust, reference number 116234, Black Dial.
So straight in?
Straight in, no kissing.
No plan B?
If you give yourself the slightest possibility that you have a safety net or there's an exit, and you'll never ever push yourself to the limit. Never.
Well, selling one or two watches is one thing, but scaling that, how did you bridge the gap?
I got a lot of help, a lot of incredible people. I'm a foreigner in a country that isn't mine, selling watches at the boot of my car. I mean...
That's mad, isn't it?
That's fucking mad. I don't get why people actually trusted me at the time. I wouldn't have. Like a guy that no one knows, who are you? I could have easily swapped it for a fake one. That's not me. In my small way, I wanted to make a small impact on the watch industry.
So how does it feel to have this vault here with this massive collection of watches in?
It is a really, really special feeling. I'm not very often in the shop anymore, but to give you an idea, when I started my business and when I got the shop fitted, and it cost me about 26 or 25,000 pounds to fit the store up, and that was the last money I had at the time. I didn't really have any watches because I had to sell everything to build the shop. I sat here on that chair for 2.5 years, every single day at 8 o'clock sharp till 6 o'clock, every single day, including a Sunday, to just try to sell some watches. And the funny bit is I didn't even have a card machine. I've sat on that chair for 2.5 years every day, no daylight, nothing, just to build the business to where it is now. It's unbelievable, like.
It's great, isn't it?
Aye.
So what's the most expensive watch you've ever sold? Because that's got to put you on such a high as well.
The most expensive watch that my team and myself have ever sold was $7 million US.
$7 million. So was that one lump sum? Here's a watch, here's $7 million.
No, it was different. It was, here's the money, here you have the watch.
In reverse. So you always mention your team and you're very respectful of those.
Yeah.
Why couldn't you have made it on your own?
You're only as good as the people you have around you, right? And I have incredible people around me, right? And genuinely, to scale a business, no one can ever scale a business alone. It's impossible. You can have an idea, you can have visionary. You're not a superhuman, right? I am not very good in organizing things. I am most probably the most chaotic person on the planet. But if I commit to something, I do it. And I will finish that job. Why I wouldn't be able to do it with my team is because everyone has its qualities.
Well, I think the mark of a good businessman is to recognise someone that can do something better than yourself.
Oh.
And as soon as you get to that stage, you keep recognising parts of your business that can be done better by someone else.
Yeah, exactly.
Hello, hiya, alright.
Stephanie, meet Mark.
Hello.
Ashley,
How are
meet
you,
Mark.
Stephanie,
Nice
alright?
to meet you.
Alright then. Ashley, did you say, yeah? Hi, alright then.
So this is where the magic happens. Admin, office, my personal life, and all sorts of things are being arranged here.
I mean, that's a job, isn't it, organising here? My life.
That's a nightmare.
I like the mural on the wall. Brilliant, isn't it?
So this is the Amsterdam Arena. This is a surprise. This was Stephen's surprise whenever we moved in. A bit of home. A bit of home on a pitch I was supposed to play.
More magic.
James is all those photos that you see on Instagram, these beautiful fucking photos, that's James. So everything is taken
Nice to meet
specific
you,
way.
James.
James, this is Mark.
It's nice to meet you. So the pictures obviously are the aid to selling, aren't they? Without a good,
Exactly.
Without a good photographer, he'd be no one, would he?
Exactly. Exactly.
So everything was going well. So was it plain sailing from there on?
Not really. No.
Tell me about it.
COVID hit. COVID changed my life.
The coronavirus is the biggest threat this country has faced for decades. Close all shops. You must stay at home.
Our business stopped, mate. No one was buying nothing. I didn't know what to do. I was panicking. I took half my stock and sold this at big losses. I gave up on my company on the first week of lockdown. I gave up. I just gave up. It was done. I failed again. I'm a disappointment again.
That's lived with you for a long time, this disappointment thing.
Yes. Yeah.
Not being good enough.
Not being
failing.
good enough. No. That's my entire life. I always had the feeling I had to fight, and I always had the feeling I had to prove myself. After a week of feeling sorry for myself, I just manned up. And the first thing I did is I called Stephen, the manager at Goldsmiths. Stephen, I know we've talked about this for a very long time, and I always joked about, but I'm dead serious. Are you joining my business? And I don't know if I can afford you, but are you joining my business? Because I can't do this alone. I can't save this ship alone. I can't save this ship, this sailing ship that is now floating somewhere without any direction. I can't save this myself. I need your help. There's $250,000 here on this bank account of all the shit I sold, right? It's gonna be a risk, and I'm not gonna promise anything, but it's basically do or die. From that moment, we started thinking, how can we do this? We need to fix the website. We need to fix this.
So what started the YouTube journey?
The fact that we needed an alternative way of marketing. We needed a different way of marketing. We needed to save the business because that bank account, that $250,000 was going down very, very fast.
And starting YouTube for an older chap isn't the easiest thing in the world to do, is it? I know
Are you
from
calling me
experience.
old? Are you calling me old here?
Well, I'd call myself a young 55, so that's about 45. I'd call you an older 35, so that makes you 45. So I reckon we're on a level here.
All right, fair enough, fair enough.
But it's quite a daunting thing, isn't it, starting a YouTube channel?
It saved my life, it saved the business, and it gave everyone a job today.
Oh my God, this is so official.
Nothing against China. Oh, we got 100K! Caffeine is good for me.
Film as much as you want.
It's my baby.
I will get a tattoo.
A very good morning from California.
Subscribe.
You found a niche where you roast celebrities about their watches and watch collections. Have you ever had any kickback from that?
Recently, I did for the first time, yes. Funny enough, I got my first lawsuit. Wow, brilliant.
Did you enjoy opening that?
I'm actually laughing my balls off.
I was just going to say, did you laugh at it or did you cry? Because it's one or the other normally.
No, I laugh at it.
Now, lots of people will try and tell you that becoming rich is easy, probably because they want to sell you some sort of get-rich-quick scheme. However, this isn't the case, especially at a young age. It's not impossible to become wealthy, but you do have to be very strategic. I'm not pretending to sell a magic bullet. In fact, I'm not selling anything. I just enjoy sharing my many years of experience, and I personally believe by avoiding these 8 things, you'll have a much higher chance of becoming rich. Hi guys, it's Mark. So let's make money interesting so that you can grow your wealth. First up, we have extended warranties. I have to say, they're one of the biggest scams out there. Well, apart from the Squid Game token, that's for sure. I learned this when I bought my first method of transport, a Yamaha DT100 motorbike. I paid for an extended warranty, which they added to the monthly payments of the bike. Every month they were feeding on my bank account like some sort of vampire. The worst thing of all is I didn't need the extended warranty, but the salesman used fear tactics to pressure me into purchasing it. Just think about it, when you buy a new PC, the chances are the retailer bought the PC from a third-party supplier, meaning the amount of profit they make is very small. That's why it makes sense for them to push an extended warranty onto you. It's where all the extra profit is made. What people seem to forget is a lot of credit cards offer an extended warranty, so you can just purchase an item on your credit card to get the same protection, and you pay no interest as long as you pay it off at the end of every month in full. Most people just completely forget that they have an extended warranty, not to mention the fine print, which usually makes it very hard to make a claim, so it's good as throwing your money down the drain. Normally they ask you if you want a 3-year warranty. However, the manufacturers cover the first 2 years anyway. So the reality is you're only buying an extra year anyway. So honestly, when you factor in your consumer rights and using a credit card for payment protection, why would you need an extended warranty? I bet a lot of shops don't want you to know this. Number 2 is new cars. What if I told you that a new car was the #1 killer of wealth and financial freedom? The untold truth is that a lot of people take on car finance to look and feel rich, but most of the time they don't even own their own home and are living paycheck to paycheck. I was looking to buy a new car when I was around 19 years old, and I was amazed to find out that I could buy the same car pre-owned for around half the price. So from that point on, I promised myself that I wouldn't buy a new car unless I really wanted it and I could buy it from my passive income. In fact, I actually bought my first brand new car when I was in my early 30s, and it was for my wife. The first time I bought a new car for myself was around the age of 35. I am such a loving husband though. I now have a Tesla Model 3 as it's a great write-off for my businesses, but I still spend most of my time driving around in my old van from A to B. So many people finance their cars, it's gotten to the point that car dealerships don't even tell you how much the car costs. They just ask you how much you can afford every month, and if the car seems too expensive, they just lengthen the payment term so it seems cheaper. Those cheeky chappies, you gotta watch them. The average car payment in the USA is between $500 and $600 every single month just to drive a fancy car,
And even when it's paid off, most people just keep upgrading as it's a status symbol. It's like an endless cycle of flexing. Just to drive this point home, average stock market returns are 10%. If you invested $500 a month for 30 years, you'd have over $1 million for retirement. And that's going off 10%. And we've all seen the crazy crypto returns lately, so just use your imagination of what's possible. Talking about crypto, if you want to grab $10 worth of free Bitcoin, then for a limited time, Coinbase is giving it away when you open an account. I'll leave the link below. Third, we have penny stocks. While it's true people have made a lot of money by investing in penny stocks, it's a real gamble. Believe it or not, the average annual penny stock return is actually minus 30%. Penny stocks are extremely high risk investments that usually have very little information and history, as the companies can be relatively new. This could be an absolute recipe for disaster due to the pure volatility of the stocks. Small market caps and low liquidity means it's far easier to manipulate the price of the stock. For example, the big stocks like Tesla have market caps far in excess of 1 trillion, so a few whales selling hardly makes a difference to the price, whereas a penny stock typically has a market cap of under 300 million. So all it takes is a few big sales and it can send the stock through the floor. I invested in penny stocks when I was younger and I had some great luck. This was back in the days of the Wolf of Wall Street. They used to have huge rooms full of salesmen on the phone pumping up the prices of whatever penny stocks they liked. These were known as boiler rooms. This was also they could sell at the peak and make huge profits for themselves. I think I got lucky and jumped in on a few of these penny stocks and sold before the whales, leading to a nice profit. So you may be thinking, why have I put this on the list? Well, the truth is that I got lucky, and looking back now, the potential downside was really not worth the risk. Number 4 is eating out regularly. Now, I don't want to seem like a downer, but the average American household spends $3,000 plus per year on eating out, and that's not even accounting for alcohol as well. When I was building my wealth, I always saw eating out as a waste of money, and therefore never fell into this trap. I learned how to cook at school, and I still enjoy cooking now when I have the spare time. Not to mention, cooking at home is generally a lot healthier.
Well, your body is a temple, Dad.
Yeah, probably Buddha. I think the bigger issue here is drink. Not only does it hold you back financially from your goals, it can also throw you off your game the next day, which is never good. I believe in maximising every day, and successful people don't have time for laying around all day with a hangover. The richest CEOs in the world, like Elon Musk and Jeff Bezos, probably don't mind a drink, but they're certainly only keeping that sort of thing for special occasions. Next up is expensive gifts. It's so easy when you're young to think your friendship group is amazing and you're going to be friends forever, but that's just not the case. I often sit back and reflect on how far I've come, and when I look back, it's amazing how many people have come and gone from my life. Maybe this is because I never bought them expensive gifts. But seriously, when you're young, no one expects you to buy luxury gifts, and if they do, then, to be honest, they're no friend to you. I never saw the point of buying expensive gifts when I was building my wealth, and my girlfriend, now my wife, has never had any problem with that. If love is in your heart, then it doesn't need to come out of your wallet.
You should consider being a dating coach, Dad, with advice like that.
What can I say? I've still got it, son. But seriously, with all that said, it's important not to waste money on expensive gifts, especially for people that could end up being temporary. Every single expensive item you buy for yourself or someone else is a major setback, as early on in your journey it's the most important time to be investing so things can start compounding. I'm not saying you can't buy